There's important stock to watch out for, and we told you about it early in the morning, and that is Eureka, Forbes. Well, for last 3 quarters, the management have been giving out very interesting updates on the exchanges post their earnings, but they've actually had a proper Eureka is gaining in trade. Is this 52 weeks? Pull up today's. That is where the action is 6% higher. Yeah. I was thinking why it's losing right now. So the point is that they've actually had a physical analyst meet and met a bunch of analysts. And Renu Baid Pugalia, vice president at IIFL, was also attending that meet. And one of the notes were using the word the management sounded very pumped up meeting the analysts. Was that the case? I mean, yes, it's got a very good management quality now, but were they really appearing very pumped up, Renu?
Yeah, definitely. I think this was their first analyst meet, which they held after the entire team has been in charge for the last 18 months. So clearly a lot of excitement with the management, first formal interaction from their side. And things that they had outlined for year one, they have successfully delivered, both in terms of category expansion, growth, volume growth coming back in double digits, margin expansion, and operational efficiencies, and more importantly, strategic directions which they embarked upon. At least the management seems to be more comfortable that they're at the right track. So over the next 2 to 3 years, we should see them delivering on the story pretty comfortably.
Recommendation on the stock. Hi Renu, this is Anisha also joining in the conversation on Eureka. What kind of targets you have? And I'm sorry if I'm putting you on the spot, but I would love to get your sense on this entire deal which is brewing on a global level between Bosch and Whirlpool, and if you had any comments to make on that back home.
Well, for Eureka, Forbes, the target price has been 600 rupees, which is approximately 30% upside from current levels. And if we see the stock trades approximately at 40-41 times fiscal 26 earnings. So to us, the stock looks pretty attractive with very strong EPS CAGR of 45%, strong free cash flow conversion and balance sheet. So this continues to be among the top pick within the consumer electrical space for us. On the sidelines, as you asked, no specific comments on the Whirlpool buzz which has been going around. So we'll have to wait and watch how events unfold instead of just commenting something based on news rumors and floats which have been going around.
Renu, before we let you go, just a quick word on the management has. I want to understand the efforts and the steps the management has guided for margin management, improving the product mix, and going deeper into the country. I mean, I remember they put out a very nice map of India, how rural electrification and availability of 24/7 power is actually increasing the prospects of the products.
True. So for water purifier as a category to really grow and penetrate, this category really hasn't grown as a segment over the last 5 to 7 years, partially attributable to the external elements, rest to the players who themselves were just milking the existing market then. So the new team at Eureka, which took charge in the last 18 months, so the first, at the macro level, they were facilitators that Government of India in the last 5 years was very aggressive with respect to the Jal to Nal Yojana. So because of that, the penetration of tapped water connection saw marked improvement, in addition to ensuring there's 24/7 availability of power. So these two are the basic enablers which ensured that the target market of the TAM for the water purifier as a category looks interesting. So this is approximately a 44 billion category, and management expects this to become a 100 billion plus category in the next 5 to 6 years, which is where they're very confident, not just, and the beauty of this category is extremely difficult to penetrate, has a very strong service income aligned with every installed base which you tend to create. So it's just not about drawing down on the first product sales, but also an aftermarket recurring income stream, which is unlike any other consumer electrical or durable category that we see. And in both of these segments, Eureka Forbes is very strongly present and positioned with its AquaGuard brand in the market to that extent. So clearly what management has highlighted is consistent investments in R&D and new product development, which will ensure that the pipeline of new products, both for the mass market as well as the premium segment of the market, remains pretty strong and intact. And in addition, they have a very good mix, distribution and GTM mix, which is a combination of D2C, which is very much unique to Eureka. In addition, in the last 2 years, they have very systematically increased their exposure to modern retail format, e-commerce, and other trade channels, which are catering to different segment of the end markets. So on a blended basis, they are targeting a much wider penetration in the affordable segment, expanding the reach and driving premiumization in the mass market and the mass premium segment of the market.
Right.
And at the same time, driving margins and operating efficiencies, which is combination of cost, pricing, and everything else combined there.
Okay, so a lot of factors coming together for Eureka Forbes. Thanks, Renu, for making time and speaking with us today. So that's the latest on Eureka Forbes. Clearly positive, and the management has been delivering on what they have been promising.
If you like this video, then like, share and subscribe to ET Now.